Right now, something very important is happening in the market, and most people are completely missing it. While the public is still confused, smart money is already positioning for what could be one of the biggest moves in financial history. And on Gold Silver Scope, we break this down in the simplest way so you don't get left behind. The current positioning is very clear. The focus is heavily on silver and silver miners, and there is a strong reason behind that. Historically, silver has always moved after gold. But when it moves, it doesn't just follow, it explodes. This is not just a theory. Both technical signals and fundamental factors are now pointing in the same direction, and that alignment is rare. If we look at recent price action, silver has already shown its power. It moved from around 61 to the mid-70s in a very short time. That kind of move is not normal in a quiet market. It shows pressure building underneath. And right now, the market is sitting in what we call a congestion zone. This is a phase where price moves sideways, shaking out weak hands, confusing late buyers, and building energy for the next move. But here's the key point. Congestion does not mean weakness. It usually means preparation. Markets do not go straight up forever. They move in phases. First comes accumulation, then breakout, then acceleration. What we are seeing right now is the final stage before another powerful breakout. And once silver breaks out of this range, the next move is expected to be even stronger than the previous rally. The last surge, from November to January, already shocked many investors. But what's coming next could be faster, sharper, and more aggressive. This is how bull markets behave in later stages. They become more emotional, more volatile, and more explosive. Now let's talk about targets. There is a growing expectation that silver could reach the $300 to $500 range. That might sound extreme to some people, but when you study long-term charts and historical patterns, it starts to make sense. Markets that stay suppressed for a long time often overcorrect in the opposite direction. And silver has been suppressed for decades. Another important factor is relative strength. When we compare silver to gold using ratio charts, we can clearly see that silver has recently broken out of a long-term ceiling. This is a major technical signal. It tells us that silver is now entering an outperforming phase against gold. And historically, when this happens, silver doesn't just outperform slightly, it massively outperforms. This is why many investors are now shifting focus. Gold remains strong and stable, but silver offers more upside potential in percentage terms. It is more volatile, yes, but that volatility is exactly what creates opportunity. Of course, corrections will happen. They always do. In fact, recent pullbacks were mainly caused by late buyers entering at high prices and then panicking when the market corrected. External events also added pressure, creating temporary fear. But these corrections are part of the process. They clean the market and prepare it for the next move. The bigger picture remains unchanged. The trend is still up, the momentum is building, and the structure is forming for a much larger breakout. The market is not topping. It is transitioning. And the most important thing to understand is this. The public has not fully entered this market yet. When they do, when they finally realize what is happening, that is when the real acceleration begins. Right now, many are still laughing, still doubting, still waiting. But markets move the most when disbelief turns into urgency. What's on the other side of this current phase could be a move that surprises almost everyone, and those who understand it early are the ones who benefit the most. To truly understand where silver could be going, we need to zoom out and look at the bigger historical picture, because what is happening today is not random. It is part of a long-term cycle that has been building for decades. If we go back and study silver's price behavior over the last 50 years, we notice something very interesting. For a long time, silver kept moving in a wide range, roughly between very low levels and a ceiling near 50. Every time it approached that level, it got pushed back down. This created a long-term compression pattern, where price was repeatedly suppressed and controlled. Now here's where it gets important. When a market stays in a range for a very long time, the eventual breakout from that range is usually very powerful. It's like compressing a spring. The longer the compression, the stronger the release. If we measure that historical range using simple price projection methods, we already get targets that go significantly higher than previous highs. But when we look at the same move on a logarithmic scale, which reflects percentage growth rather than absolute price, the potential becomes even more dramatic. That's where projections in the hundreds start to appear, including the 300 to 500 range. But it's not just technicals. Fundamentals also support this move. One of the biggest drivers is monetary expansion. Over time, the supply of currency keeps increasing. This reduces its purchasing power. In simple terms, money buys less and less over time. And this is the key idea. Gold and silver are not really going up. It is the value of currency that is going down. Precious metals are simply reflecting that loss of value. Historically, cash has been one of the worst places to store long-term wealth. Over decades, it loses a large portion of its value. So when investors take profits, the question becomes, where do they go? If not cash, then what? The answer often returns to gold. Gold acts as a store of value. It doesn't decay like currency. So even when investors take profits from silver, many choose to move that wealth into gold rather than into cash. This creates a cycle within the precious metals space itself. Another major point is the relationship between silver and gold. In the past, silver used to trade at a much higher percentage of gold's price, but today, that ratio is still very low. This suggests that silver is undervalued relative to gold. If silver simply returns to its historical average relative to gold, the price targets we discussed earlier become much more realistic. And if it overshoots, which markets often do, then those targets may even be conservative. We also need to address a common misconception. Many people believe that wars or geopolitical events are the main drivers of gold and silver prices. But historically, that is not accurate. These events may create short-term reactions, but they are not the core reason for long-term trends. The real driver is monetary policy. When central banks increase money supply, cut rates, and support financial systems, they indirectly push investors toward hard assets like gold and silver. This is a slow but powerful force that builds over time. Right now, we are seeing signs of stress in multiple areas, including bond markets and banking systems. These pressures often lead to policy responses such as rate cuts or increased liquidity. And every time that happens, it strengthens the case for precious metals. So when we combine all these factors, long-term technical breakout, monetary expansion, undervaluation relative to gold, and macroeconomic pressure, the picture becomes very clear. The current move is not just another rally. It is part of a much larger structural shift. And if this shift continues as expected, the next phase of the move could be faster, stronger, and far more emotional than anything we have seen so far. Now, the most important question is, what should you actually do when this move plays out? Let's imagine silver does reach the 300 to 500 range. At that point, it is very likely that we will see sharp corrections. Markets do not move in straight lines, especially at extreme levels. There will be volatility, sudden drops, and strong reactions. That is completely normal. But here's the key idea. Even after those corrections, the market may not return to old levels. Instead, it could settle into a new, higher range. This is how major bull markets evolve. They don't go back to where they started. They reset at higher levels. So if profits are taken during that phase, the decision becomes critical. Many people naturally think about moving into cash. But history shows that cash loses value over time. So instead of preserving wealth, it slowly erodes it. This is why many experienced investors prefer to rotate within the precious metals space. For example, taking profits from silver and moving into gold bullion. This allows them to lock in gains while still staying protected from currency devaluation. Another major opportunity lies in mining stocks. For a long time, mining companies have underperformed compared to the metals themselves. But recently, there are signs that this trend is changing. Technical breakouts in mining indexes suggest that they may enter a strong outperforming phase. And when miners outperform, the gains can be significant. This is because they are leveraged to the price of the underlying metal. So if silver rises sharply, mining stocks can rise even faster. At the same time, we need to keep an eye on central bank actions. Interest rate decisions, liquidity injections, and economic data all play a role in shaping market direction. There are increasing signs that policy shifts may be coming, especially if economic conditions weaken. And when central banks respond by easing policies, it often acts as fuel for precious metals. More liquidity, lower rates, and increased uncertainty all push investors towards safe assets. So when we put everything together, the strategy becomes clearer. Focus on strength, understand the cycles, and avoid emotional decisions. The biggest mistake investors make is reacting to short-term noise instead of following long-term trends. This market is not just about price, it's about understanding value, timing, and positioning. And those who stay patient and informed are the ones who benefit the most. If you want simple and powerful analysis like this, make sure you stay connected with Gold Silver Scope, where we break down complex market moves into easy insights that actually help you take action.